Billionaire CEOs like Bezos, Zuckerberg, Jamie Dimon, and the Walton family are selling off massive amounts of their own stocks, and analysts think that the CEOs may be bracing for a market downturn and getting out before the tech bubble bursts. Now, an overheated stock market continues to climb to new heights. As investors feed that frenzy with fear of missing out, economic insiders are unloading billions of dollars of stocks. Their motivation for divesting could hold serious implications for regular Americans. Now, some of the recent major transactions include Jeff Bezos, who sold 50 million shares of Amazon worth $8.5 billion. Now, prior to 2019, he never sold more than $3 billion in a single year. Jamie Dimon, the CEO of JP Chase, who sold 822,000 shares in the bank for $150 million just last week. And in fact, this is his first time selling in 18 years. We have Leon Black, co-founder and former CEO of Apollo Global Management, who sold $172 in stocks for his first ever sale of the company stock. Mark Zuckerberg sold roughly $1.2 billion of stocks in Meta, and the Walton Trust sold $1.5 billion in Walmart stock this month. Now, these stocks are being sold as the S&P 500 index is at an all-time high, meanwhile driven by just 7 companies. This past year, it has risen 28%, and the NASDAQ is up nearly 40%. Now, during that time, Meta stock has soared 186%, JP Morgan is up nearly 30%, and Amazon has actually surged close to 90%. All 3 companies are trading at close to record highs. And analysts think that the trigger for this mass selling could be the upcoming election and the volatility that will most certainly bring. Now, wealthy stockholders may want to take advantage of tax breaks implemented during the Trump administration before they're potentially removed by a new Congress. Selling massive chunks of stocks may also send a more dire message to individual investors. Typically, if CEOs are buying shares, it shows a confidence in the future growth potential of that company. Selling, however, implies that the shares are fully valued and it's time to get out while the getting is good. And there is a possibility that these billionaires' view from above is giving them a different perspective in the economy and where it's headed. Dimon has already sounded the alarm on the astronomical growth of government debt, calling it the most predictable crisis currently facing the economy. He's also very concerned about the impact of lingering inflation and growing geopolitical conflicts, and according to him, stocks are riding high on a soft landing that will likely never come. And he's also comparing today's economy to that of the 1970s, which gave way to runaway inflation, stagnant growth, and record high interest rates. As Dimon put it, markets change their mind pretty quickly. Remember in 1972, you felt great too. And before any crash, you feel great, and then things change. And he's not alone in this. Deutsche Bank also said that they see a very striking resemblance to the 1970s. Meanwhile, Apollo Global Management said that the current bubble in AI stocks is even bigger than the internet eras. The top 10 companies in the S&P 500 today are more overvalued than the top 10 companies were during the tech bubble in the mid-1990s. And Morgan Stanley's chief economist said that a hard landing recession is guaranteed as the full impact of Fed rate hikes have yet to hit the economy. Now, she cited Dimon's recent comments saying, "We will have a hard landing at some point. I guarantee you that. We're all wondering, when does that happen?" The point that Dimon makes is that there are these cumulative impacts that build over time, and we're in the camp that we haven't seen all of the tightening impacts of the monetary policy. For evidence of a looming recession, Morgan Stanley pointed to corporate defaults reaching their highest levels since the pandemic. Also, bank lending has fallen for 3 straight quarters, and inflation continues to come in higher than expected. A recession, even a mild one, could cause a 40% drop in stock values, pummeling retirement funds. Now, billionaires, CEOs, and financiers have at least one trait with the average Americans: they don't want to lose money. The motivations for these massive sell-offs can never be fully known, but if those in the know are shedding stocks and diversifying their holdings, perhaps the rest of us should investigate how to protect our assets from any potential crash. Physical precious metals in a gold IRA can safeguard the value of retirement funds from the exact dangers that we're being warned about. Now, if you're concerned about the current economic outlook and you're looking for a way to get some risk off the table, I'm Mackay Block with American Hartford Gold. Give us a call today and we'll discuss how adding physical gold and silver into your portfolios can give you the hedge that you need.
Discover how gold can help you protect yourself and your family. Call today or visit our website for more information at AmericanHartfordGold.com.